Hello and welcome to the class of ACCA Management Accounting. In this class, we are starting our chapter number 7, which is Process Costing, Joint Product and Further Processing, where we need to understand what is process costing, then what are the joint product and byproduct, then what are the eligibility criteria to whether further process the product or not based on the expected yield. Okay, so these are the all topics that we need to study in this chapter. So let's first start with the very first topic of the day, which is process costing. What is process costing? So process costing is a method of costing which is used so it is a method of costing which is used when a identical or homogeneous products are mass produced through a continuous process. So what is process costing? It is a method of costing which is used when a identical or a homogeneous product is mass produced through a continuous process. Now sir, what is identical or homogeneous product? Identical or homogeneous product are the product which is manufactured in a mass category which is same. Suppose if in a FMCG sector, fast moving consumer goods sector, you are manufacturing shampoo sachet, okay, the small pouches of shampoo. So suppose if you are manufacturing 1 lakh pouches of shampoo, so they are identical and homogeneous. Both every pouch of the shampoo is going to be the same, so that are known as identical or homogeneous goods. Okay, so I will write example shampoo pouches. Okay, so these are the uh, example of identical or homogeneous product, okay, where you manufacture them in a mass quantity through a continuous process. Now sir, what is continuous process? Okay, suppose in order to manufacture a product, first what do, you do some input, you have some input means input in the form of raw material. Okay, so you give raw material to the production, then what they do, this is their input, the raw material is the input of the production, then they make process on that input. So this input will go on the process number 1, in which what will happen, they will apply some labor, and also they will apply some expenses and overheads. Okay, then after putting the input in the process 1, you will get some product which is going to be further processed in the next process, which is known as process 2, where you include additional input of some raw material. So we will write some additional raw material. Okay, so in first what you have gave the input to the, you have gave raw material as the form of input to the production, then they have done processing on it by applying some labor, expenses and overhead, then get the product from process 1, then product of the process 1 becomes the input of process 2. So this is the input for process 2, where you give additional raw material and then you also apply some labor and also apply some expenses or overheads. Then again it gave some product which is again going to be the input for process number 3, then it is the input for process number 3. So first what you gave the raw material as the input to process 1. After doing some labor and other expenses work on the given input, it gives the result which is becomes the input for process 2. Then again you gave some additional raw material to the process 2 and some labor and some expenses, then what the product the your process 2 is giving is the input for process 3, and so on. This is the known as the continuous process. So what we are studying, we are studying process costing, which is the method of costing which is used when a twin or identical products are manufactured in a mass category, in a mass manufacturing of the twins or homogeneous product in a mass level, which is true going to done on the basis of continuous process. So this is the continuous process where you keep processing the product until you get the final end product. Got it? So this is the process costing. Now the thing with the process costing is that it is not always possible the number of input which you give will only result in the equal number of finished product. Okay, it is not possible that always the number of unit which you give you the exact number of output. Okay, which is known as process loss, which is known as process loss, or also known as the normal loss. What I am saying, suppose if this is your input, if this is your input, okay, so suppose we have given the input of raw material of 10,000 kgs. Okay, so we have given input of 10,000 kgs. Then it goes on the process. Okay, it goes for the process which is process 1. Then it gives the product, then it gives the finished product. Okay, it gave you the finished product. So what we have gave the input, we have gave the input as a form of 10,000 kgs of raw material. Then the finished goods that we have received is 9,000 kgs, because this is the loss which is going to happen when you process the input, because it is not always possible that you get the 100% output of the input. There is always going to be some losses. So that loss which is always going to happen, which you cannot prevent, the loss which you cannot prevent is known as the normal loss. So in this process, when you gave the input of 10,000 kgs, what is the normal loss that you incurred? You incurred the normal loss of 1000 kg. You incurred the normal loss of 1000 kgs, which you cannot prevent, which cannot be prevented. So this is your normal loss. Okay, or also known as the expected loss. Okay, so this is your normal loss. But suppose in case, what will happen, the input which you give of 10,000 kgs gives you the final result of 8,000 kgs, give you the final product of 8,000 kgs. So what you were expecting, you were expecting that you will end up getting 9,000 kg, but you end up getting 8,000 kg. That means you end up getting less quantity, you end up getting less quantity which you expected to get. That means this is abnormal loss. This is the result of abnormal loss of how many units? The 1000 units. And how you got it? Because you were expecting 9,000 kgs of final product, but you end up getting 8,000 kgs of final product. That means that 1000 of unit which you didn't get, or the 1000 kgs of finished product which you didn't get, is the abnormal loss, which is above the normal loss, because you were expecting that okay, 1000 kgs of loss will be there because it is the normal loss. So if I have gave the input of 10,000 kgs and 1000 kgs is the normal loss, then I will get 9,000 kgs of finished goods. This is normal process. But if you get the output of 8,000 kg, that means you were expecting 9,000 kgs, but you got the 8,000 kg. That means the 1,000 kg which you loss excessively is known as the abnormal loss. Okay, but suppose in the case if you are expecting 9,000 kgs after the normal loss, but in the end you end up getting 9,500 kgs, you end up getting 9,500 kgs. So you were expecting that you will get 9,000 kg, but you end up getting 9,500 of kgs. So this is the case of abnormal gain. This is the case of abnormal gain. Of how much quantity? You were expecting 9,000 kgs, but you ended up getting 9,500 kgs. So 500 kgs is your abnormal gain. So there is always going to be some loss. Okay, in the process of process costing, there are always going to be some loss, which is known as normal loss or expected loss, which you cannot prevent. But if you get loss above that, it will be known as abnormal loss. If you get loss below the normal loss, it is be known as abnormal gain. Understood? So this is the process of normal loss. Okay, now if in order to get the answer, there is some format to calculate it. Okay, so the format is input, the amount of input which you are giving. Okay, then you need to subtract the expected loss. You need to subtract the expected loss, or also known as the normal loss from the input. After subtracting the normal loss or expected loss from the input, you end up getting the expected output. Okay, but this is your expected output which you're supposed to get after the normal output. But if you less from expected output the actual output, if you subtract expected actual output from the expected output, you will either get the abnormal loss or abnormal gain. You will either get abnormal loss or abnormal gain. Okay, if your answer is positive, then it is abnormal loss. But if your answer is negative in the negative numerical form, then it is known as abnormal gain. Okay, let's understand with the help of example. Okay, now suppose if you have give the input of 10,000 kgs, and your expected normal loss is 1,000 kgs. Okay, so what is the expected output which you are expecting? The 9,000 kgs. Okay, okay. Now, what is the actual output which you got? So the actual output which you got is also 9,000 kgs. So what is your abnormal loss or abnormal gain? Nothing, because the answer is nil. So there is no abnormal loss, abnormal gain. There is always a normal loss. Got it? Okay. Now comes to a second example. Suppose if you have given the input of 10,000 kgs and the normal loss which you are expecting is 1,000 kgs. So what you got? You got 9,000 kgs of expected output. You are expecting that 9,000 kgs will be your expected output. But when you got the actual output, the output was 8,000 kgs. The actual output was 8,000 kgs. So you subtracted actual output from the expected output. So you get the answer of 1,000 kgs in a positive form. This is your positive answer. So this is your abnormal loss. This is your abnormal loss. So if you get answer positively, this is your going to be abnormal loss, because you are expecting that you will get 9,000 kgs of finished product, but you ended up getting only 8,000 kgs of finished product. That means the 1,000 excess loss which you incurred is your abnormal loss. Okay, now comes to the third example of this. Suppose if you gave the input of 10,000 kgs, and you were expecting 1,000 kgs of normal loss. So what is your expected output? Your expected output is 9,000 kgs. Okay, now from the 9,000 kg which you are expecting, suppose if you actually got the actual output of 9,500 kgs. So if you subtract 9,500 kgs from the 9,000 kgs, the answer which you get is going to be the negative 500 kgs. Because if you subtract 9,500 from 9,000, then you will get negative 500. So this negative 500 which you got is actually your abnormal gain, because you were expecting that you will end up getting 9,000 kgs, but you ended up getting the higher value, that is 9,500 kgs. That means this is your abnormal gain. So this is the example of process loss, where you expecting the output on the basis of after considering the normal loss, and if you get the value differentially among the expected output, then it will either result in the form of abnormal gain or it will result in the form of abnormal loss. Understood? Okay. So this is the concept of what process costing and processing loss. Now we are going to value the losses. We are going to value these losses. So the next topic is valuing the losses. As the loss which you incur, the loss of output which you incur from the input is not always has zero values. It not always has the zero values. The loss of units or the loss of output may sometimes have some scrap value, you can settle it on the scrap, so it will generate some money. Okay, so in order to get the cost, you reduce this scrap value from the common cost. Okay, so you or B reduce the realizable realizable scrap value from the total cost. Okay, suppose if when you gave the input of 10,000 kgs and you ended up getting the 8000 kgs, okay, and the loss of unit is 2000 kgs. So suppose the input cost of 10,000 kgs was dollar 1 lakh, okay, the input cost of 10,000 kgs of dollar 1 lakh, and the loss, the 2000 kgs of loss is has the scrap value of, has the scrap value, that means it is going to be sold on the scrap for the value of dollar 5,000, for the value of dollar 5,000. So what is your actual cost? What is your actual, or you can say the net cost? It is going to be dollar 1 lakh less dollar 5,000, which you realize from the sale of scrap of the normal loss or the abnormal loss. Any type of case, the answer is going to be 95,000 of total cost. So not always the loss which you incur on the process is always going to be zero. It has some scrap value. So whatever the scrap value which you're realizing from the sale of that loss is going to be reduced from the total cost in order to get the net cost. Okay, so this is the how we value the losses. Okay, so this is the concept of process costing, normal losses, expected losses, and valuing the losses. Okay, I hope you're able to understand this. Now comes to the notes. So the first topic is process costing. Okay, so what is process costing? It is a method of costing which is used when identical or homogeneous. It is used when identical or homogeneous units are mass produced through a continuous process. This is the same thing that we have studied in the notes, that it is a costing method of costing which is used when a identical or a homogeneous product are mass produced through a continuous process. Full stop. As it is not practical to track the cost of each output unit separately, because it is not possible to use the to track the cost of each output separately, because you are manufacturing or producing the identical or homogeneous product, so all the products are same. So under process costing, the unit cost of a production is calculated by dividing the total cost of the process by the number of unit output from the process. Like in this case, the actual cost which you incurred is actually 95,000 cost. So unit cost of a product, if we need to calculate, how we are going to calculate the total cost, that is $95,000 after considering the scrap value of the loss, divided by total output, which is 8,000 kgs, which is 8,000 kgs. So if you divide $95,000 with 8,000 kgs, the answer which you get is going to be $11.875. So when you are going to follow the process costing, this is how you are going to calculate the value of a unit. Okay, so again, under process costing, the unit cost of a production is calculated by dividing the total cost of the process by the number of unit output from that process. Okay, so this is the diagram of this process costing. First you give the input on the process 1, then it gives the input for the process 2, then you do some, again you add some material, labor and overhead cost, then process 2 give the input to process 3, again you add some material, labor and overheads, then it gives the output for the process 3. So this is how process costing are going to done, which is a continuous cycle. Either it may have a 2 process, may 3 step, 100 of process, n number of process. Okay, so there is no such limit of the process. There can be as many process as required for the finished product to be ready. Okay, sometimes the output from one process form the material input for the subsequent process. That means this this line is the output of process 1 but input for process 2. This is the output for process 2 and this is going to be input for process 3. So this is how it going to happen. So this is the basic concept of process costing as we have understood with the help of example, and again we have read from the notes. Now comes to the second topic, which is loss of material, that we have discussed, which is going to result in the form of normal loss, expect or abnormal loss or abnormal gain. So a loss occur when the volume of output is lower than the input. Okay, underline this line. A loss occur when the volume of output is lower than the input. There is usually some level of loss during a process. There is usually some level of loss during a process, which is known as normal loss or expected loss. Some of it is expected and unavoidable, because you cannot avoid it. It is unavoidable. You cannot prevent it, while other losses are avoidable and result from the environmental changes or management actions. Okay, so there may be some losses which occur due to environmental changes or management action, which is known as abnormal loss or abnormal gain. there are three types of changes in the volume that should be accounted for. There are three types of changes. First one is normal loss, second one is abnormal loss, third one is abnormal gain. Now, what is normal loss? So, normal loss is the expected unavoidable wastage from a process. Expected unavoidable wastage. That means you cannot avoid this wastage from the process. It is going to happen. It is unpreventable, unavoidable. It is going to happen. The reason why normal loss occurs include evaporation of liquid. Suppose if you are processing the liquid form, so it will evaporate while it going to be processed. So you cannot prevent it. Then spillage of liquid. If you are processing the liquid, it is going to spill, so it is unpreventable. Also the wastage of material. So any loss which is unpreventable or unavoidable is going to be categorized as normal loss. It is valued at nil or scrap value of the applicable, if applicable. That means either it is going to be the nil if it is not going to be sold on the scrap. If it's going to be sold as a scrap, then the value which you are getting by selling it as a scrap is going to be the value of the normal loss. Then comes second, which is abnormal loss, which is beyond the normal loss. So the difference when the actual loss is higher than the normal loss. What it is saying, the difference, that is the normal loss is higher than the expected loss. Okay, suppose if you are expecting 100,000 kg, 1000 kgs of loss, and you actually got the 2000 kgs of loss. So the difference between 2000 kgs of loss which you actually got and 1000 kgs of loss which you normally, which you considering as a normal loss, so difference is 1000 kg, which is going to be your normal abnormal loss. So it is going to be valued at cost of expected output. Then again came abnormal gain. It is the difference when the actual loss is less than the normal loss. It is the difference when the actual loss is less than the normal loss. Suppose if you are expecting the 1000 kgs of normal loss, but you actually got the loss of 500 kg. That means the difference between 1000 kgs of normal loss and 500 kgs of actual loss is going to be 500 kgs, which is going to be your abnormal gain. So it is going to be valued at cost of expected output. Okay, so this is the three types of losses of material: abnormal loss, normal loss, abnormal gain. Abnormal loss is preventable, but normal loss is unpreventable, unavoidable. It is going to happen and bound to happen. And abnormal gain is a rare scenario, but still it is going to happen. Okay, so if I ask you how to calculate the expected unit output from the process, if I ask you how to calculate the expected number of units from the process, then formula is very simple. The input of units less the unit of normal loss. Suppose if you have gave the input of 10,000 kgs, if you give the input of 10,000 kgs and the normal loss of unit which you are expecting is 1000 kgs, so the actual or the expected output which you are expecting from the process is going to be 9000 kgs. So what is the expected unit output from the process? The input units less the units of normal loss. Understood? Okay, now how to calculate the normal loss or abnormal gain? How to calculate? This is the same table which we have used in the board notes, which is particular units. Okay, so first you have to give units, how many of units you are gave as the input. Then you need to reduce the normal loss. So you have done normal loss reduction from this, so you got the expected output, you get the expected output. Okay, then you need to reduce the actual output from this in order to get the normal loss or abnormal gain. So if you get the answer positively, it is your abnormal loss. If you get the answer negative, it is your abnormal gain. Okay, so this is the same table which we have used here in the notes with the example. Okay, so you can either refer this, you can either refer the notes, both are same. Okay, if you have the printout of these notes, so it is advisable to write it through pencil in this space, so that you will be able to understand all the scenarios of normal loss, abnormal loss, and abnormal gains. Okay, so these are the topic which we have studied. Now the next topic is valuing the losses. The how you are going to value the losses. So losses are not always lost entirely from the process. Losses are not lost entirely through the process. Sometimes they can be sold for scrap. This is called as scrap value. As we have discussed that you can either sold the loss as the scrap, so it is going to be the scrap value. and its information is recorded in the scrap account. So scrap account is going to record this information, that how much of loss has been sold at the scrap and what at what value. Any income generated from the scrap is used to reduce the input cost of a process. If you generating any income from the scrap, is going to be recorded as the scrap income, and this causes the process cost to be reduced. This causes the process cost to be reduced. How? Because you need to reduce the scrap values from the total cost, so you reduce the actual cost. So this is the concept of valuing losses. Okay. So till now, what we have studied process costing, we have studied loss of material, we have studied how to calculate normal loss, and normal gain, and we have studied valuing the losses. Okay, so I'm giving you 2 minutes in order to read all this. Then we are going to study about the joint products. Okay, so I'm just switching the screen in the full screen mode so that you will be able to read this. So please don't skip this part. Read this. Then we are going to understand joint product. Okay. Okay, so I hope you are done reading with the notes. Now comes to the next topic, which is about the byproduct. Okay, so what is byproduct? In order to explain the concept of byproduct, I have to give you the example of the real life process of the crude oil. Okay, you know what is crude oil? The crude oil is the natural form of oil which you get from the earth. Okay, so this is your crude oil. Okay, when you process the crude oil, you get different items. Okay, so what you get the first is the crude oil, and in order to get the final fuel as the petrol or the gasoline which you use in a vehicle or the car, you need to process it. Okay, so the first input which you get from the earth is the crude oil, and when you process it, you end up getting the fuel. But during the processing of this, when in order to get the fuel from the crude oil, there are some product which automatically gets manufactured. There are some product which you get manufactured automatically. Suppose the first process which you do on the crude oil gives you what? It gives you the natural gases such as LPG, CNG, and other liquid gases. So the first process which you do on the crude oil in order to get the ultimate fuel, it gives you the natural gas and CNG. Okay. Then after doing this process, the second process will give you what? The first form of the output, which is known as grease. Okay, it will give you grease, the grease which we use in a motor vehicle and other things. Okay, so this is the second product, which is the output of the process. Then when you further processes, you will get what? You will get kerosene. You will get kerosene. Then if you further process this input, you will end up getting the diesel. You will end up getting the diesel. But if you look at the process, what is our first input? The crude oil. This is the input. And what is our ultimately goal to get is the fuel. So this is our finished product or the finished item that we need to get from the ultimate input. So input is crude oil. Actual output is which we need is fuel. But when we are processing for the when we are processing the crude oil in order to get the fuel, what we get in between is the grease, kerosene, natural gases, and diesel. So all these are what? All these are your byproduct. All these are your byproduct. Byproduct is the product which you generate while processing the input in order to get the output. So byproduct is a product which you get unintentionally, which you get unintentionally through the processing of inputs. Okay, so in process there are many byproduct which you able to get. Suppose if you are into the farming, so what is the input of the farming? The seeds which you give on the earth. So this is your input. What is the final product? The what do you say, the wheat or rice which in order to you get, which you want to get from the output. So seed and is your input, and wheat or rice is your output. But in between you also get some byproduct, that is in the form of chara or other things. So in any process they are going to be a byproduct. Okay, suppose in a manufacturing of electricity, there are thermal plants which manufacture electricity. So what they do, they get the input of coal. Okay, in thermal plant they have the input of coal. They burn the coal in order to generate the heat, in order to get the energy, in the form of electricity. But during this process they give the output, which is the output which they gave is the waste material. Okay, of the burning of coal. They gave the waste material which is the burning of coal. So this is their byproduct, and this byproduct is further sold in the market, which is going to be used as the input in cement industry. Okay, so first industry is thermal industry, which uses coal as their input in order to generate the electricity energy. But during this process, they generate what? Waste material while burning the coal. So that waste material is their a byproduct, and which is further used by the input in the cement industry. So every industry has their own byproduct. So this is the basic concept of byproduct. The byproduct is the product we generate unintentionally throughout the processing of input into the finished product. Okay, so this is very simple process of byproduct. Okay, now what we need to study? What we need to study next is the topic which is joint product. The topic which we need to study is joint product. What is joint product? Now, understood. First, what do we do? First, we give the input. First, we give the input, and this input is going to process in this process, which is process number 1. Okay, so the amount of input which we give, the amount of input which we give in input is known as the common cost, because this is the common cost which we have gave on the input. Okay, now when we give the common cost, it the input in the form of common cost, it goes for the first process, which is process number 1. So that process, which is the first process, is going to be known as common process, is going to be known as common process. So what we give? We give input, and then input goes for the process 1. In the process 1, that input becomes the output in the form of two product, in the form of two product, a product A and product B. So one input is responsible for the output of two product A and B. Now these two product which you get from this common process, these two product which you get from the common process are going to be known as what? The joint product. These are known as joint product. What are joint product? The product which you get from the same process at the same point of time. So this is joint product. So what we have done? First we gave the input as the form of common cost, then that input goes for the process 1, which is known as common process, which gives you two product, product A and product B. So any one point giving you two product is known as joint product. Okay, now the point, this point which gives you joint product, the point at common process which gives you joint product A and B is known as split of point, is known as split of point. That is, this is the point at which your input processes and is split into two product A and B. Okay, sometimes the split of point also give you the another product which is known as the byproduct. Sometimes your split of point gives you another product which is known as the byproduct. Okay, so what is we are studying? We are studying the joint product. So what is joint product? Joint products are the product which originate or generate from the common process. So we have give the input on the process 1, which is responsible for generation of two products A and B, and also for product C, which is known as the byproduct. Okay, so two product which manufacture from a common unit, or more than two products which manufacture from a common process, is known as the joint products. And so the point at which they generate is known as the split of points. Now suppose you got the product A and you got the product B. Suppose if you thinking about giving product B into further processing. Suppose you are giving product B for further processing in the process number 2. In the process number 2. So that process number 2 is going to be known as the further processing. That giving of product B into the second process is going to be the further processing, because the first process is known as common process. When you give the output of common process into the second process, this is known to be known as the further processing. And the product which you get from the further processing is the product C. Suppose the product which you get from the further processing is product C. So this is your final product. Okay, so this is how the flow is going to be done on the concept of joint product. First you give input which is known as common cost, because this is the common cost responsible for all the product A, B and byproduct. So the input which you give is common cost. When the input gets first processed in process 1, it is going to be known as common process, because this is the process is not only done for product A or not only for product B. This process is responsible for both the product A and B. So this is known as common cost. It gives you two product A and B. So if it gives you two or more than two product at the same point of time, it is known as joint product. And the point at which they split the product is known as split off point. Okay, then if you further process the any output of the process 1, it is going to be further processing, and the output which you get is also going to be known as the finished goods. Okay, so this is the flow of joint product. Now let's read this topic from the notes in order to understand further. Okay, so this is the same diagram which is more which looks good as compared to my drawing. Okay, now what is joint product or byproduct? Okay, so first we need to understand the point number 1, which is common process. So what is common process? Let's understand. Joint products and byproducts are two or more products. So joint products or byproducts are two or more than two products that comes from a common process. So this is our common process which comes from the input, which is responsible for joint products and byproducts. Okay, now comes we understand the second point, which is the split off point, also known as the separation point. So what is split off point or separation point? At the end of a common process. What is written? At the end of the common process. So if this is process number 1, which is the common process, so this is the end. This is going to be the end. Okay, so at the end of the common process, several different products are formed. At the end of the common process, several different products are formed. So this is the end of the finished product, and product A, B and byproduct are formed. It is known as the split off or separation point. Joint products and byproducts are created after a split off point or separation point in the processing. So what it gives? It gives you joint products and byproduct, which gives the split off point or the separation point, which is the end of the common process. Okay, now the third is common cost. What is common cost? This is your common cost, that is pre-separation cost, which is responsible for both the joint product or the byproduct. So your input which you first give on the process 1 or the common process, the input which you first give on the process 1 or the common process is going to be your common cost, which is responsible for byproduct and common joint cost products. So what is common cost? The cost of input into a process that produces multiple product is known as common cost. So the cost of input which produces multiple products is known as common cost. Common cost must be apportioned between joint products, which is discussed later. Okay, so again we need to apportion the common cost between A and B and C. A, B the joint product and C the byproduct, which is discussed later. So this is your common cost. Now comes to the fourth, which is joint products. So what are the joint products? The product which you get after the separation point. So if this is your separation point and this is the product which you get are your joint products. So product A and product B are your joint product. Okay, now the third product which you get unintentionally is your byproduct. So it is your byproduct. So we have understood what is joint product, what is byproduct. Joint products are the products which we get intentionally. We are intended to get the product, so it is intentional. But the byproduct is unintentional. Whether we do not want it, it will lead to generate. It is going to happen. So it is known as byproduct. So what is joint products? Joint products are the product that are produced at the same time from the same process. So A and B are the joint product. What is byproduct? A product that is produced at the same time as joint product but has significantly low sale value is known as byproduct. Anything which generates with the same flow of the joint product but has a low sale value or which is generated unintentionally are known as byproduct. Then comes last the further processing. Suppose after getting the product B, we gave it for the further process in the process number 2. So that further processing after the common process is going to be known as the further processing. That another process after the common process is going to be known as the further processing, which will give you the another product, suppose product D. So this is your further processing. The output of a common process may be further processed into another product, then it is known as further processing. So this is the diagram which will only help you in understanding the joint product, because otherwise if I try to explain you joint product through different method by not following this diagram, I will not be able to help you. I will not be able to help you to understand the joint product. So this is the best example in order to understand the joint product, where you have the input, where you have the common process, then you have the split of point, then you have the joint product, byproduct, then you have the further processing. Okay, so I am just erasing the highlights from this so that you can read it. Okay, I am giving you 2 3 minutes, 4 minutes, 5 minutes, whatever you take, pause the video, but look at this diagram, understand this diagram, memorize this diagram, because if you memorize this diagram, you will able to solve all the question related to this chapter, because entire chapter is only this diagram. Okay, this is your input, then this is your output. In between there is going to be normal loss, abnormal gain, then you have the joint product, then you have the byproduct, then you have the further processes. The entire chapter is this only, and not only entire chapter, the furthermore concept which you are going to study, the other chapters also included in this. So please memorize this chart in order to understand the joint product, byproduct, and further processing, everything. Okay, so just I'm leaving it here for you in order to read this in 2 or 3 minutes, then we are going to understand about the apportionment of joint product. Okay. Okay, so I hope you have done reading with the chart and the uh, description given below. Okay, now the topic which we need to go are the apportionment of common costs between the joint products, then the accounting for byproduct, and then the concept of evaluating the further processing validity plus. So there are three concepts which is left for us to understand in this chapter, which we are going to cover in the next class, because this includes some practical part of the chapters. Okay, so this is all for this part of this chapter of this class. Then we are going to study the further remaining topic in the next class, and in the next class we are going to solve question also of this chapter. Okay, so this is all for this class. We will see in the next class. Till then, bye bye. Thank you. Hello and welcome to the another class of ACCA Management Accounting. In this class, we are going to complete our chapter number 7, which is process costing, joint products, and further processing. In the previous class, we have studied about the process costing, the joint products, the byproduct, the valuing of losses, the normal losses, the abnormal losses, and abnormal gains. These are the topics that we have studied in the previous class. In this class, we have to start with the first topic for the day, which is apportionment of common cost between the joint products. So we need to study how common costs are need to be apportioned between the joint product. Suppose if we give the input, if we give the input which is going to be our common cost. Okay, so the amount of input which we are giving is known as the common cost. Suppose the common cost is 1 lakh dollar. Then this input goes for the process number 1. This input goes for the process number 1, which is known as the common process, which is known as the common process. Then at common process, it gives you two product A and B. It gives you two product A and B. So this point at which this gives you the two product is known as what? Split of point, or also known as the separation point. So we are also revising what we have studied in the previous class. Okay, so it gives you two product A and product B. These two product which it gives to you are the joint products. These two product which it gives you after the split of point are known as joint product. Now what we need to study? We need to study how to apportionment the common cost between the joint products. So we need to understand what is the way at which we can apportion or distribute this common cost among product A and product B, which are our joint products. So this is what we need to study. Okay, now there are three ways. There are three ways or three bases of apportionment of. There are three ways or three bases of apportionment of common cost. Apportionment of common cost between the joint products. There are three bases or three ways. Way number one or first basis is on the basis of on the basis of units produced. Second, on the basis of sale value. And third, on the basis of net realizable value, NRV. So there are three ways. Okay, now let's read this from the notes itself. What is the topic for the day? Is the apportionment of common cost between the joint products. So common cost may be apportioned to joint product using the following methods. Method 1, by physical measurement on the basis of unit produced, whether it is in the form of quantity or weight or volume, anything. So first method is on the basis of physical measurement or on the basis of market value, which is the sale value. And third, on the basis of net realizable value. So we need to understand all three ways, all three methods to apportion the common cost between the joint products. Okay, so let's start with the first way, by physical measurement or by the unit produced. Okay, so we are starting with the by physical measurement or the units produced, or the basis of units produced. Okay, now in order to understand all the method, we need to use example. Okay, so let's start with the example number 1. Suppose if you gave the input, okay, which is your common cost, suppose your common cost is dollar 1 lakh. Suppose your common cost is dollar 1 lakh. Now this input goes for process 1. This input goes for process 1, which is your common process, as we all know. So this is your common process. Now at the end of the common process, is your split of point. So this gives you two product A and product B. This gives you two product A and product B. So the common cost of 1 lakh dollar gives you two product A and product B. In product A, you get 10,000 units. In product A, you get 10,000 units, and in product B, you get 15,000 units. Okay, so you gave the input in the form of common cost, so you got the common process, and at the end of the common process is your split of point, so where you get two product A and B, which are your joint product. So we need to distribute this 1 lakh dollar of cost of common cost between product A and product B on the basis of physical measurement or the basis of unit produced. Okay, so what is the formula of such distribution? So the formula for such a distribution is given in your notes, which is joint cost of a product is equals to joint product per unit cost multiplied by the joint product unit. So what is the formula? Joint product cost, joint product per unit cost multiplied by the joint product units. Okay, so the formula is joint product cost is equals to joint product per unit cost multiplied by the joint products units. Okay, so this is your formula. But sir, what to do with the formula? We don't know anything. So let's understand. What is the joint product per unit cost? Okay, so we need to first understand what is the joint product per unit cost. So joint product per unit cost is equals to common cost divided by total joint product units. What is joint product per unit cost is equals to common cost divided by total joint products units. Now understand what is this. What is your common cost? Your common cost is $1 lakh. So we will write dollar 1 lakh divided by total joint products units. What is total joint products units? Your joint products are A and B and they have the output of 10,000 units and 15,000 units. So total of this, that is 10,000 and 20 and 15,000 units, that is 25,000 units, is actually your total joint product unit. That means how many of total units which you get in the form of total, in the form of joint products, whether A, B or C, whatever joint product you are having, the total of that will be known as total joint product units cost. So you are getting 25,000 in. So in order to get the joint product per unit cost, you need to divide the common cost by the total joint products units. So 1 lakh divided by 25,000 units is going to be $4 per unit as your joint product per unit cost. So in order to manufacture 25,000 of entire output of both the product A and B, is your cost is your $4 per unit, because you are having the common cost of $1 lakh. So if you distribute $1 lakh among 25,000 units, you will get the $4 per unit. Now we need to apportion the cost. So we need to get the joint product cost. So joint product cost of product A is going to be joint product per unit cost, which is $4 per unit, multiplied by joint product unit. So for A it is 10,000 unit and for B it is 15,000 unit. So joint product cost of A is going to be $4 multiplied by 10,000 units. $4 multiplied by 10,000 units is going to be $40,000 for product A. Then comes the joint product cost for product B. So again, the joint product cost per unit cost is $4 multiplied by the number of unit of joint product. So for B number of B joint product, there are 15,000 of units. So $4 multiplied by 15,000 units. $4 multiplied by 15,000 units will give you what? The $60,000 of cost of the joint product B. So what is your common cost? Your common cost was $1 lakh. Your common cost was $1 lakh. Then we distributed the or apportioned the common cost between product A and product B, which are joint product on the basis of physical measurement. So A has 10,000 units, A has 10,000 units, and B has 15,000 units. Okay, and in order to distribute it, we have used the basis of units. So 1 lakh unit distributed to 10,000 unit is $40,000, and for B joint product, it is 60,000 unit. Okay, if we want the formula to be simple, if we want the formula to be simple, it is 1 lakh dollar divided by 25,000 unit multiplied by 10,000 unit. So again the answer will be 40,000 unit, $40,000, and so again 1 lakh dollar divided by 25,000 unit multiplied by 15,000 unit is going to give you 60,000 units. So this is how you're going to distribute the common cost among the joint product on the basis of physical measurement or on the basis of unit produced. So this is method number 1 or base number 1. So we have completed our first method, the distribution on the basis of unit produced or on the basis of physical measurement. I hope you are able to understand this. That what is given to us, it is given to us that there is a common cost of $1 lakh and you have to distribute it on the basis of unit produced. So A has $10,000 of 10,000 units and B has 15,000 units. The formula for joint cost product is joint product per unit cost multiplied by the joint product units. So in order to get the joint product per unit cost, the formula is common cost divided by total joint product units. So 10,000 plus 15,000 is 25,000. So $1 lakh divided by 25,000 unit is going to be $4 per unit. Then you need to multiply that $4 per unit with the 10,000 unit of product A and 15,000 unit of product B in order to get the joint product cost. Understood? Okay. So this is the first way. Now we need to understand the second way on the basis of market value, on the basis of market value or the sales value, because sales value are also known as the market value, which is the rate at which your product are going to be sold in the market. Okay, now again we need to understand this with the help of example. Example number always 2. Okay, we write it 2. Suppose if we have the input, which is given in the form of common cost. So we have provided input which is your common cost of dollar 1 lakh. Again it is dollar 1 lakh. Then your input goes for process 1. Which is known as your common process. So this is your common process. Then at the end of the common process, what is there? It is the split off point. So this gives you two product A and product B, which are your common product. Okay, now you again got 10,000 units, you again got 10,000 units, you again got 15,000 units. Sir, this looks same. Sir, this is looks same as per the above example. No, this is different because now you need to apportion it on the basis of market value or the sale value. So on the joint cost on the joint product which you have the 10,000 unit in product A and 15,000 unit product B, you are also going to be provided with the information of selling price. So 10,000 unit of product A is going to be sold at the selling price of dollar 5 per unit, at the selling price of dollar 5 per unit, and your product B is going to be sold at the selling price of dollar 3 per unit. So now with the number of unit produced, you are also provided with the number of unit, you are also provided with the selling price per unit of the product. Okay, now you need to apportion the common cost on the basis of sale value. So again we need to use the formula. So the formula is joint product cost. The formula is joint product cost is equals to, in method number 2, which is the market value, is joint product per unit cost multiplied by the joint product sale value. Okay, so we will write joint product per unit cost multiplied by the sale value of joint product. Okay, in the previous case what was there, the formula was joint product per unit cost multiplied by the joint product units, because it was on the basis of unit, so you need to multiply by joint product units. But now it is on the basis of sale value, so you need to multiply it by the sale value of the joint product. Understood? Always the joint product per unit cost remains same in both the example. Now First we need to calculate the sale value of the joint product. Okay, so we will calculate sale value of joint product A. First we are going to calculate sale value of joint product A. So how many of units you have produced? 10,000. And what is the selling price per unit? $5. So what is the sale value of joint product A? It is 10,000 units multiplied by $5 per unit, multiplied by $5 per unit. So the sale value of a joint product A is $50,000. Understood? Okay. Then we need to calculate again the same value, sale value of the joint product B. So sale value of joint product B is going to be how many units produced? 15,000 of units at a rate of selling price of $3 per unit. So we will write 15,000 units multiplied by $3 per unit, which is going to give you the answer of $45,000, which is going to give you the answer of $45,000. Got it? So we have calculated the sale value of joint product. Now we need to calculate joint product per unit cost. So we need to now calculate joint product per unit cost, which is going to be the common cost, which is going to be common cost divided by total sale value of joint products, which is going to be common cost divided by total. You notice every time I write total, I write it with the red color because this is the total of both the product A and product B. Okay, so what is the common cost given to us? The common cost given to us is $1 lakh. So we will distribute or divide $1 lakh with the total sale value of joint product. So for A joint product it is $50,000 and for joint product B it is $45,000. So we will distribute on the basis of this $50,000 plus $45,000. So if we distribute this, the answer that we got is $1 lakh divided by 95,000 units. So please use your calculator. 1 lakh divided by 95,000 is going to be somewhat near $1.053. Okay, so this is the joint product per unit cost, $1.053. Now we need to get the common joint product cost. Okay, so the joint product cost is joint product per unit multiplied by the sale value of the joint product. So we will get joint product A cost. So the formula is joint product per unit cost, that is $1.053 multiplied by the sale value of the joint product. So sale value of the joint product A is 50,000. So we will multiply it by $50,000. So 1.053 multiplied by 50,000. Use your calculator. The answer that we are going to get is $52,650. Then again the joint product B cost is going to be the joint product per unit cost, that is again $1.053 multiplied by how many of the sale value of product B? $45,000 multiplied by $45,000 is going to be 1.053 multiplied by 45,000 is going to be 47,385 approx. Okay, this is again approx. So if you do total of this, you will get somewhat near $1 lakh quantity. Okay, so this is the apportionment of common cost between the joint product on the basis of market value or the sale value. Okay, so what was your common cost? Your common cost was $1 lakh, which you are supposed to apportion between joint product A and joint product B on the basis of what? Sale value. So this was the sale value of joint product A and this was the sale value of joint product B. So you need to distribute this on the basis of this formula. So you can use this short trick, that is $1 lakh of common cost divided by $95,000 multiplied by $50,000 of the joint product A sale value, and same here $1 lakh of the common cost divided by 95,000 of the sale value of both the product multiplied by the $45,000 of the sale value of the product B. Then again you will get the answer which is same, that is somewhat near 52,650, and this is 47,385. These are approx because there is some difference due to decimal. Okay, so this is approx, this is 3. So this is how you can solve or apportion the common cost between the joint product on the basis of market value or the sale value, which is method number 2. So till now we have completed the apportionment of common cost between joint product on the first method and on the second method. First method on the physical measurement of the unit produced, and the second method which is on the basis of market value or the sale value. Got it? Now the only third topic is left is on the basis of NRV. So before we go for this, I request you to please read this, the two adjustment on the basis of physical measurement on the basis of market value, then only we will go for the third method. Okay, so I'm giving you 2 minutes to read this, then we are going to study about the NRV basis. Okay, so I hope you are done reading with the topics. Now, third way of apportioning the common cost between the joint product is on the basis of net realizable value. It is on the basis of net realizable value, which is also known as NRV in short, which is also known as NRV in short. Okay, now what is net realizable value? Every time you hear the word net, you need to understand that everything which is net of is also the reduction in the value of gross, because if you reduce anything from gross, if you reduce anything from the gross, it is going to give you net, it is going to give you net, that is net realizable value. So when it says net realizable value, it has some reduction from its value, it has some reduction from the value. Okay, it may be that there is going to be a gross realizable value, there was supposed to be a gross realizable value, and then if you subtract anything from it, if you subtract anything from it, what you will get? You will get net realizable value, that is NRV. Okay, so now first we need to understand what is NRV, then only we are able to understand what is the apportionment of common cost on the basis of NRV. Okay, now sometimes what happens, the product gets manufactured from the common process, the product gets manufactured from the common process, but there is no market for that product, there is no market for that product, that product has to go on the another process, the product has to go for the another process or the further processing in order to be ready to be sold in the market. What I am saying, that sometimes we give input, that is our common cost, that are common cost, then that input goes for the common process, which is process number 1. So this is common process. Okay, now at the end of the common process, we all know what is there, there is a split of point. So suppose this split of point gives product A and product B. Now at this point where it gives product A and product B, which are our joint product, there is no market for them. Suppose there is no market from them, no one is ready to purchase them. Okay, so there is no market for them. Okay, both for product A and for product B, there is no market for them. Now what will happen? No one is ready to purchase them because it needs further processing, they need further processing. So suppose product A go for process 2 and product B goes for process 3 in order to further process, then only you will get some product. Suppose now you will get product C and now you get product D. Now you get product D. So now it is available and to be ready to sold in the market. So at the common point, at the common process, at the split of point, you get two product joint products A and B, but there is no market for them, and they have to go for the further processing in order to be ready for the market to be able to sold. They have to be get further process in order to be ready for the market to purchase them in order to get sold in the market. So you need to apportion the common cost, but you cannot wait till the last process, because if you wait till the last process, then you are not able to apportion the common cost. Okay, now understand from this point. Okay, because we all know what happens till this point, now we need to understand from this point. Suppose at this point at this point product A and product B has no market, so they have to go for the process 2 and process 3, they have to go for process 2 and process 3. Now when they go for process 2 and process 3, they incur some cost, so the additional cost they incur, the additional cost which they need to incur at the process 2 and the additional cost which they incur as process 3 is going to be known as the additional cost, or the further processing cost is going to be known as the further processing cost. Suppose in product A the additional cost is $2, and in product B the additional cost is $3. Okay, and the product C is going to be sold at the selling price of the product C is going to be sold at the selling price of $12, and product D is going to be sold at the selling price of $15. So when you going to further process product A and product B, then only it will be able to sold in the market for $12 and for $15. But in order to get it able to sold in the market for $12 and $15, you need to do further processing in process 2 and process 3, which will incur you the additional cost of $2 and additional cost of $3. So what is your NRV? Your NRV is net realizable value. So this is your realizable value. This is your realizable value. And what realizable value? This is your gross realizable value. Again, this is your gross realizable value. And this is your further processing cost. And this is your further processing cost. And this is your further processing cost. And if you reduce the further processing cost from the gross realizable value, you will get net realizable value. So what is net realizable value of A? The net realizable value of A is going to be $12, the gross realizable value less $2, that is $10. And what is the NRV for product B? Is going to be the $15, the gross realizable value less the further processing cost, that is $3, is going to be $12. It's going to be $12. So this is your net realizable value per unit. Okay, now understand this with the help of this example only. Suppose in further process in joint product you get 10,000 units of product A and you get 15,000 unit of product B. Okay, you get 10,000 unit of product A and you get 15,000 unit of product B. Okay, now we need to understand how this apportionment is going to be done. I hope you are able to understand this example, that at the spirit of point you get two product A and B, but there is no market for them in order to be sold in the market. So it needs further processing in the process 2 and in the process 3. So when A goes for process 2, then it becomes product 3, then it will be able to sold in the market for $12. But in order to get it able to sold in the market for $12, you need to incur further cost of $2. So this is $12, the gross realizable value. This is $2, the further processing cost. If you reduce this $2 from the $12, you will get the $10, which is your net realizable value. In the same way, in the product B, it needs further processing in the process 3. So if they goes for the process 3, you will get the product D, which is the next product of process product B. Product D is able to be sold in the market for $15, but in order to get it able to sold in the market for $15, you need to incur $3 for additional cost. So that $15 is your gross realizable value, that $3 is your further processing cost. If you reduce this $3 from the $15 of the gross realizable value, you will get the $12 of net realizable value. That is NRV $10 for product A, NRV $12 for product B. This is how NRV is done. Still, we have not understood how the apportionment of common cost is going to be done for the basis of NRV, but we have just understood the concept of NRV. Okay, now we have to understand how apportionment need to be done. Now comes to the notes. The on the basis of net realizable value, which is one of my favorite topic. Okay, if no sale value is available at a joint product for a joint product at the separation point. If no sale value is available for a joint product at a separation point. Sir, what is separation point? Separation point and splitter point are the same thing. So whether it is written separation point or the splitter point, both are same thing. So if there is no sale value for the joint product at the splitter point or the separation point, then apportion the common cost based on the net realizable value. Then you need to apportion the common cost on the basis of net realizable value, that is sale value less further processing cost. So that $15 and $12 is your sale value, then you need to reduce further processing cost in order to get the NRV. I hope this is simple for you, that NRV is equals to sale value less further processing cost. Underline it, making it star. This is the point of understanding the NRV. Okay, now how to apportion the joint product on the basis of NRV. So joint product cost of product A or product B is going to be joint product cost per dollar of sale, joint product cost per dollar of sale multiplied by the joint product net realizable value. Earlier it was used to be joint product per unit cost, joint product per unit cost, but now it is the joint product per dollar of sale multiplied by the net realizable value of the joint product. Now, how to get joint product dollar per dollar of sale? It is common cost divided by total of the net realizable value. It is total cost, common cost divided by the total net realizable value. And how to get the joint product net realizable value? It is joint product sale value after further processing, that is less further processing cost. So what is the joint product net realizable value? It is joint product sale value after further processing less further processing cost. So now let's understand how we are going to apportionment the joint product on the basis of net realizable value. So first formula is joint product cost is equals to joint product per dollar, joint product cost per dollar of sale. So we will write joint product cost is equals to joint product cost per dollar of sales multiplied by joint product net realizable value multiplied by joint product net realizable value. So we need to first identify what is joint product net realizable value. So joint product net realizable value is joint product sales after further processing less further processing cost. So what is the joint product net realizable value for product A, for product A? So what is the NRV of product A per unit? That is, product A is going to be sold at the rate of $12 if this is further processed with the further processing cost of $2. So NRV of joint product A is, we will write NRV of A is equals to $12 less $2, which is going to be $10, which is going to be $10. Okay, now how many units of product A are there? There are 10,000 units. There are 10,000 units. So you need to multiply it by 10,000 units. So 10,000 units multiplied by $10 is going to be 1 lakh dollar. It's going to be 1 lakh dollar. Okay, now we in the same way we need to calculate joint product net realizable value of product B. So what is the NRV of product B per unit, which is $15 after further processing less further processing cost of $3. So we will write $15 less $3, which is going to be $12, which is going to be $12 per unit. And how many units of product B are there? There are 15,000 units. So we will multiply it with by 50,000 units. So 15,000 units of product B multiplied by $12 is going to be, please use your calculator, 15,000 multiplied by 12 is 1,80,000 dollar, is going to be 1,80,000 dollar. Okay, so now what we got? We got the joint product net realizable value. Okay, and now we need to calculate joint product cost per dollar of sale. Okay, joint product unit cost per dollar of sales, which is equals to what? Joint product cost per unit dollar of sale is going to be common cost divided by total net realizable value. So it is again common cost divided by, again we need to use the blue color, red color, total net realizable value of joint product. Okay, now what is the common cost? So the common cost is again same. What is it? Is dollar 1 it is dollar 1 lakh. So we will just divide dollar 1 lakh with the total net realizable value of joint product. That means total of both joint product A and joint product B. So it is 1 lakh dollar and 1,80,000 dollars. So we need to distribute on the basis of 1 lakh dollar plus 1,80,000 dollar. So it is going to be dollar 1 lakh divided by dollar 2,80,000. So the answer is going to be 1 lakh divided by 2,80,000 dollar, which is going to be dollar 0.357, which is going to be dollar 0.34357. Now we have got the value of joint product per unit cost, which is dollar 0.357, and this is the joint product net realizable value of product A and product B. So now we can calculate the joint product cost of product A and product B. Okay, so first we will write joint product cost of A. We will write joint product cost of A. That is the joint product unit cost per dollar of sale, which is dollar 0.357 multiplied by the net realizable value of product A, which is 1 lakh dollar. So we will multiply it by 1 lakh dollar, which is going to be 0.357 multiplied by 1 lakh dollar, which is going to be 35,700 dollar, 35,700 dollar. Then again we can calculate the joint product cost of product B, that is dollar 0.357 multiplied by the net realizable value of product B, that is 1,80,000 dollar. So we will multiply it by dollar 1,80,000. So 0.357 multiplied by 1,80,000 dollar is going to be 64,260. Okay, this is going to be in the value of approx because we have taken decimal. Okay, so due to decimal it is going to be somewhat approx. So this is how the joint cost of 1 lakh dollar, the common cost of 1 lakh dollar is going to be apportioned to product A and product B on the basis of net realizable value, on the basis of net realizable value. Okay, so this is how you can solve the apportion the common cost on the joint product on the basis of NRV. So what we have done? We have done the simple mathematics. We have done the simple mathematics that you first have the common cost of 1 lakh dollar and you wanted it to apportionate between product A and product B on the basis of NRV. Okay, so there was gross realizable value of $12 and there is the further cost of $2. So you get the $10 of NRV, and in the same way for product B there is gross realizable value of $15 and you have the further cost of $3, so you get the NRV of $12. So you get the NRV of $12. Okay, now you need to apportion this on the basis of NRV. So on the product A you have 10,000 units and for the product you have 15,000 units. So the total NRV is going to be, the total NRV is going to be 10,000 unit multiplied by $10 is going to be 1 lakh dollar, and for total NRV of B is going to be 15,000 units multiplied by $12 is going to be 1,80,000 dollar, is going to be 1,80,000 dollar. Now you need to apportion the total cost or the common cost on the basis of this NRV. So the formula is very simple. The common cost of 1 lakh dollar divided by the total of NRV, that is 1 lakh and 1,80,000, that is 2,80,000 dollar, multiplied by 1 lakh dollar, and for the same year 1 lakh dollar of the total cost divided by 2,80,000 dollar of the total NRV multiplied by the NRV of product B, which is 1,80,000 dollar. So the answer is going to be same, 35,700 dollar, and this is 67 200 is 64,260 dollar. 1 minute. 64,260 dollar. This is going to be on the basis of approx. This is again on the basis of approx because of the decimal. So again, this is the third basis and third method of apportioning the common cost between the joint product on the basis of NRV. So there are three ways. First is on the basis of physical measurement or on the basis of the unit produced, or second on the basis of sale value or on the basis of market value, and the third on the basis of net realizable value. So in order to get the uh, apportionment on the basis of net realizable value, first you need to calculate the what is net realizable value. That is gross realizable value less further processing cost, or the sale value less further processing cost is going to be the net realizable value. Got it? Got it. So this is your topic, which is the apportionment of common cost between the joint product on the basis of physical measurement, on the basis of market value, on the basis of net realizable value. Understood? Okay. Now, there are some important points which I want you to understand. That every time I divide the common cost with the total joint product unit or the total joint product sale, I use the total with the red color because that total means total of both the joint product. This total means total of the all joint products. Okay, there is not only the total of any one particular joint product, it means the total of both product A, product B. If there is product C, then also product C. So this is the total of all the joint product. Also, I want you to understand this, that for this method, the market value method, where we calculate the joint product cost by multiplying the joint product per unit cost with the joint product sale value. So in order to calculate the joint product sale value, what is need to be considered? So for calculating the total joint product sale value, consider the number of unit produced and not the number of unit sold, because in sometimes question will give you both the number of total unit produced and the total of number of units sold, but you need to consider only the total of number of unit produced, not the unit sold. Because suppose if you have produced 10,000 unit of product A, but you have only sold 5,000 unit of the product A, but the cost need to be apportioned on the basis of unit produced, not on the basis of unit sold. So the answer will be on the basis of number of unit produced. So that is the same thing which I am saying here in that red point, that for calculating total number of unit product sale value, consider the number of units produced and not the number of units sold. Don't consider the number of units sold. That is total joint product sale value for product A or for product B. It is going to be the number of units produced multiplied by the selling price per unit, not the number of units sold multiplied by the selling price per unit. I know you have some doubt that the selling price has the relation with the selling price, selling value, but no, the selling unit not need to be multiplied by the selling price. The selling price need to be multiplied by the total number of unit produced, because you are apportioning the common cost which is incurred for the production. So the common cost need to be in apportioned on the basis of number of unit produced, not on the number of units sold, because many question are there in your question bank which has same value and same confusion. Okay, so I have written this here. I will repeat this point again while we are solving the question in the next class. Okay, so I hope you are able to understand all these three method of apportioning the common cost between the joint products. Okay, now the next topic for today is the accounting of byproduct. If you want some break, please pause the video, take break, go. If you want to understand the NRV again, then you can go back on the video, pause it, read it, understand it, and if you have any doubt, you can WhatsApp me, you can Telegram me on the given link below. If you are watching this on the YouTube, okay, you can have every possible way to get connected with me through Instagram, through WhatsApp, through Telegram, anything which you like. Okay, now the next topic is accounting for the byproduct. So what is byproduct? Byproduct, as we all understood, it is the product which is generated from the process which is unintentional. So byproduct are the products produced as a side effect of making something else. Suppose you are making something else from the crude oil, you are making petrol, but you are making something else, but you got the byproduct in the form of kerosene, diesel, or natural gases. So byproduct has a less significant sales value than joint product. Of course, byproduct will have the less significant joint sale value as the joint product, but they do have a value and are not waste product. They may have a value, they do have a small value, they are not completely zero. Byproduct may incur further cost if they must be separated from the main product or treated before the sale. byproduct may incur further cost if they must be separated from the byproduct. Suppose if you have kerosene as the byproduct, so in order to sell the kerosene, you need some further cost again to store it and then get it through the supply cycle in order to get it to the ultimate customer. So the net realizable value, that is the net realizable value NRV of the byproduct, is subtracted from the common cost before apportioning to the joint product. Suppose if in the split of point you get two product A and B and the C the byproduct, so you need to less the sale value of the byproduct from the common cost, then only the common cost is going to be apportioned between product A and product B. What I am saying, that I am saying, suppose if you have the process 1 here, if you have the process 1 here, and this is your split of point and this is your split of point, and this you get the joint product A, you get the joint product B, and you get the C, which is your byproduct, okay. And the process 1, the input which you have given, has cost you the common cost of dollar 1 lakh, has cost you the common cost of dollar 1 lakh, and the byproduct C, which you get unintentionally, have the sale value of $5,000, that is the net realizable value or the scrap value. So the common cost which need to be apportioned between A and between B is going to need to be $1 lakh less $5,000 of the scrap value of the joint product byproduct, that is $95,000. So now the $95,000 is the total cost which need to be apportioned between A and between B by any method which you can follow. So this is how the accounting of byproduct is going to be done. Okay. So this is very simple. Okay. Just don't go for the notes only. This is just very simple logic that you need to reduce the byproduct sale value from total product A common cost. Then you can get the net common cost, which that is $95,000, which is need to be apportioned between A and between B. So common cost, that is $1 lakh, need to be reduced by the NRV of the byproduct, that is $5,000, so that you can get the common cost that need to be apportioned to the joint product, that is $95,000. That is $95,000. Got it? Okay. So this is how you do the accounting for byproduct. This is how you do the accounting for byproduct. Okay. Now the last topic, last but not the least. Okay. Again, we are provided with the formula of NRV of byproduct, which is sale value less further processing cost. Got it. Now evaluating the further processing validity. Sir, what is this further processing validity? Suppose in this example, you got product A and product B. Okay, but in order, it also has the dependency or to get further produce, further process, and then get the next product. So you need to evaluate whether you should further process it or whether you should not further process it. Suppose if the suppose now let's read from the notes. Evaluating the further processing validity. For further processing of a joint product to be worthwhile, the incremental revenue must exceed the additional processing cost. Sir, what is this? Suppose, now did understand this from the example. Suppose after the split of point, you get product A, you get product B. You get product A, you get product B. A has the selling price of $12 and B has the selling price of $15. Okay, now this product A and B can be sold off here. This product A and B can be sold it off here at $12 per unit, at $15 per unit. But you also have the option to process this further as process 2 in the process 2 and again this in the process 3. So you will able to get the product C and you will able to get the product D, which has the selling price of suppose $18 and which has the selling price of suppose $20. So if product A and product B are sold here and after the split of point, it is able to be sold for $12 and $15. But if you further processes for the process 3 and process 2, they are able to be sold for $15 and $15. So we are evaluating whether we need to further process them or we do not need to further process them. If you look at this diagram only, then you are say, sir, please further process it because A, which was supposed to be sold for $12, will get the sale value of $18, and the product B, which was supposed to be sold for $15, will get the sale value of $20. So it just looks like we need to further process it. But the twist is then I am saying if I further process them, there is going to be the further cost. There is going to be the further cost of $4. There is going to be the further cost of $4, and in process product B, there is going to be the further cost of $7. So now what to do? Whether I should further process them or not. So now in order to evaluate whether you should further process the product or not, we have given with the formula, that is incremental revenue less further processing cost divide then you less further processing cost, so you get the incremental profit or loss, which will help you in understanding this. Suppose in the previous example basis we use this formula, that is we use this formula to get the answer. Incremental revenue less further 1 minute less further processing cost is going to give you what? Incremental profit or incremental loss. Okay, so this is your formula. Now we need to understand for both product A and product B. Okay, now let's understand for product A. What is the incremental revenue? Incremental revenue is the increase in revenue for further processing, because it was sold for $12, now it is going to be sold for $18. So what is the increment? Increment is the difference of the sale price. So $18 less $12, this is going to be the incremental revenue, that is of $6. That is of $6. And for product B, it is going to be $20 less $15, that is $5 is the incremental revenue of product A and product B. Now what is the further processing cost? Now what is the further processing cost? The further processing cost is this, which is given to you if you further process them. So for product B, the further processing cost is $4. You need to reduce $4, and for product B, product A, it is $4, and for product B, it is $7. Now if you reduce them, you will get the answer. So $6 less $4, that is $2, and $5 less $7, that is -$2. That is -$2. So if you get the positive answer, it is incremental profit. If you get the negative answer, it is incremental loss. So this is incremental profit and this is loss. So what is the decision that we should go? The decision is that please further process joint product A. Please further process joint product A, but do not further process joint product B. But do not further process joint product B, because if you further process joint product A, you will have the incremental profit. But if you further process the joint product B, you will have the incremental loss. So go for product A, don't go for product B. Got it? So this is the concept of evaluating further processing validity. This is the formula of evaluating further processing validity. Okay, and what is the conclusion with the answer? That incremental revenue is going to be the further process sales value less separation point sale value, that is $18 or $12, and then $20 and $15, that is A and this. If the answer is positive, that is profit, it is worthwhile to go for further processing, it is advisable to go for further processing. Okay, common costs are not relevant for further processing decision. Okay, now this common cost has nothing to do with the further processing decision, because further processing depends on the incremental profit or incremental loss and not on the basis of common cost. So common cost has nothing to do with this decision making. Okay, so this is the concept of evaluating the further processing validity. With this, we have completed all the topics of your chapter number 7, which is process costing, joint product, and further processing. So we have completed process costing, we have completed joint product, we have completed further processing. This is all in this chapter in your ACCA study hub. I have not left any topic for you, whether it is relevant or irrelevant. I have completed 100% topic for you to understand the concept with the help of example. I know NRB basis of the calculation of the common cost is not in your ACCA study hub question bank, but I have done in the class in order to make you understand, because if I skip it, it has nothing to do with your question solving. But If I am teaching you, it is my duty to make you understand all those concepts with the help of example. Okay, so this is all for this class. We have completed our chapter number 7 concept. In the next class, we are going to solve the question of this chapter. Then we will complete this chapter completely along with all the question. So till then, bye bye. Thank you. Hello and welcome to the class of your ACCA Management Accounting. In this class, we need to solve all the question of our chapter number 7. So without wasting any time, let's start solving the question number 1 for the day. That is, in a process, there is no work in progress. Okay, there is in the process, there is no work in progress. All the work has been done. Two joint products J and K are created. So you are ended up with their two joint products J and K. Information in units related to the last ones are provided to you. So all the information which is given in below are they in the form of units. So for product J and product K, you are provided with the information of sales, that is 6,000 unit and 4,000 unit. You are provided with the information of opening inventory and you are provided with the information of closing inventory. So you have opening inventory, you have closing inventory, and you have the number of unit sold. Now joint production cost of last month was $1,10,000. So on the last one there was $1,10,000 of the joint production cost. These were apportioned to joint product based on the number of unit produced. So the common cost need to be apportioned to the joint product J and K on the number of unit produced. The question is, what were the joint production cost apportioned to product J for the last month? We need to find out the total joint product cost for the product J, and the common cost need to be apportioned on the basis of number of unit produced. Okay, but you are not provided with the number of unit produced. You are provided with the number of units sold. You are provided with the number of unit opening inventory. You are provided with the number of unit of closing inventory. So you need to calculate what is the amount of number of unit produced. So the formula that you can use to get the value is that the sale unit is equals to opening inventory plus the number of unit produced less the number of unit of the closing inventory. If you use this equation, you can get the number of value of unit produced. So if you change this equation, the equation becomes sale units less opening inventory, sale inventory less opening inventory plus closing inventory is number of unit products. That means production units. So if you use this equation, you can get the value of number of unit produced for J and for product K. So for J, the opening inventory is 100 units plus the number of sale unit is, sorry, I'll write this like this. For J, the sale unit are 6,000 and the number of opening inventory is 100, so less 100 plus closing inventory, that is 300 plus 300 is going to be 6,000 less 100 plus 300 is going to be 6,200 units of produced for product J, and for K it is going to be number of units sold. So 4,000 less number of opening inventory 400 plus number of closing inventory 200. So 4,000 less 400 plus 200 is going to be 3,800 units. So total units of both product J and K are 10,000 units. Now you need to apportionate the common cost on the basis of number of units produced. Okay, so for J it is going to be $1,10,000 of the common cost divided by the total number of unit produced, that is 10,000, multiplied by the number of unit produced for J, that is 6,200. This is going to be the answer for J, and for K it is going to be $1,10,000 of the common cost divided by $10,000 of the 10,000 unit of produce of both J and K multiplied by the 3,800 units of the product K. So it will give you the joint product cost of K. So for J it is 1,10,000 divided by 10,000 multiplied by 6,200 is going to be 68,200, and for K it is 1,10,000 divided by 10,000 multiplied by 3,800, it is going to be 41,800. And question has asked you to get the apportioned cost of product J. So the cost of product J is 68,200 $6,200. So the answer is $68,200, which is option number D. Got it? Okay. So which point is important here is that in order to calculate the number of unit produced, you can use this equation. You can use this equation. Okay. Now comes to question number 2, which is information related to two process A and B are as follows. You are provided with the information of two process A and B. Process A and process B. The normal loss as percentage of input in process A is 5% and the normal loss of output in the process B is 8%. Okay. Now the input given to you in the form of liters are 55,000 and 40,000 and the output, which is the actual output given to you, is 52,000 and 37,000 in liter. For each process, was there an abnormal loss or abnormal gain? So question is whether there was abnormal loss or abnormal gain in each process, that is in process A, in process B. So we can calculate this process A, process B. First, what we need to write? We need to write input. So what was input? For process A, input was $55,000 and 55,000 number of liters, and for process B it is 40,000 liters. Now we need to subtract the normal loss. We need to subtract the normal loss. So normal loss for A is 5%. So 55,000 multiplied by 5% is going to be 2750, and normal loss for process B is 8%. So 40,000 multiplied by 8% is going to be 3200 liters. So what is the expected output which you are supposed to get? The expected output is $55,000 liters, less 2750 liter is going to be 52,250, and 40,000 liters less 3200 liters is going to be 36,800. Now if you reduce the actual output from it, you can get abnormal loss or abnormal gain. So less actual output. What was actual output? $52,000, 52,000 liter and 37,000 liter. So if you distribute this, 52,250 less 52,000 liter is going to be 250. So if you get the answer in a positive way, that means it is abnormal loss. And 36,800 in process B less 37,000, that is if you get the answer negative, negative 200, it is actually abnormal gain. So for A it is abnormal loss, for B it is abnormal gain. So answer is for A it is abnormal loss and for B it is abnormal gain. So answer is option number A. Understood? Simple. Now comes to question number 3. Two products G and H are created from a joint process G. There are two products which has been created from the joint process G. G and H. G can be sold immediately after the split off point. So G can be sold after the split off point, and H requires further processing into product HH before it is in sellable condition. So G can be sold it, and H requires further processing to become HH in order to sold. There are no opening inventory and no work in progress of product G. So there is no opening inventory and no work in progress for product G or product H or for product HH. So there is no opening inventory, no work in progress for all the products. The following data are available for the last period. You are provided with the data. You are provided with the joint common total joint production cost, which is also your common cost. So you are provided with the common cost of $450,000. Then you are provided with the further processing cost of product H, that is $66,000. Product G and product H has the production unit of 3,45,000 and 2,30,000 units. Closing inventory of product G is going to be 20,000 and product H is going to be 34,500. Using the physical unit method, apportion the joint production cost. What was the total cost of the closing inventory of product HS for the last period? What we need to calculate? The closing inventory value of the product HS for the last period. This is what we need to calculate. Now, this is a very good question. This is my favorite question. Please mark it 3-star. Okay, because before examination you need to revise this. Now, what the question is saying that this is the split off point where you get product G, you get product H. G can be sold it at this point, but H require further processing to become HH. H required further processing to become HH. So at the spread of point, the common cost was $4,50,000. The at the spread of point, the total common cost was $4,55,000. But for the further processing of product H from H to HH, it additionally requires $66,000 of the additional cost. Okay, now question is asking, if you use physical unit method to apportion the common cost, what is going to be the closing inventory value of product HS? What is going to be the value of the closing inventory product HS? That 34 to 500 units of closing inventory product HS. What is going to be the value? Now you need to first apportionate the common cost on the basis of number of unit produced. So for G it is 3,45,000. For HS it is 2,30,000 units. So for HS, if it is 2,30,000 units, then for H it is also again going to be 2,30,000 units. So this is common for H and common for HH. Okay, so G is 3,45,000 unit and H is 2,30,000 unit, and you need to apportion the common cost on the basis of this. So 3,45,000 plus 2,30,000 is going to be 5,75,000 unit. Now you need to apportion the common cost on the basis of this. So for G, it is going to be common cost of $4,50,000 divided by total number of unit 5,75,000 multiplied by the number of unit of G, that is 3,45,000. 3,45,000 is going to be 4,50,000 divided by 5,75,000 multiplied by 3,45,000 is going to be $2,70,000 is going to be $2,70,000. For H, it is going to be $4,50,000 divided by total number of unit, that is 5,75,000 multiplied by the number of unit of H, that is 2,30,000 is going to be 4,50,000 divided by 5,75,000 multiplied by 2,30,000 is going to be $1,80,000 is going to be $1,80,000. Okay, so now we have only apportioned the cost of product G and product H, but HH require further processing cost of $66,000. So cost of HH is going to be $1,80,000, that is apportionment of common cost plus further processing cost of $66,000, which is going to be 1,88,000 plus $66,000 is going to be $2,46,000 cost of product HH, that is for the unit 2,30,000. This is going to be the cost for entire units produced, that is $2,30,000. Now what question requires us? Read question carefully. Question requires us what was the total cost of the closing inventory of the product HS. It is asking us the total cost of the closing inventory of the product HS. So if $2,30,000, if $2,46,000 is the total cost for 2,30,000 units, then what is going to be the cost for closing inventory of 34,500 units? What is going to be the cost of closing inventory of 34,500 units? So you need to distribute or divide 2,46,000 divided by 2,30,000 multiplied by 34,500. The answer is going to be $36,900. The answer is going to be $36,900. Okay, so this is the solution for question number 3. I hope you are able to understand this. Okay, now comes to question number 4. An organization operates a process that creates two joint products J and K. An organization operates a product which results in two joint products J and K. Last month, joint cost of the $6,000 were incurred, and the organization apportioned this on to the joint product using the sale value method. So the common cost is $60,000, and it need to be apportioned to common product on the basis of sale value. Data relating to the last month given to you as are follows. You are provided with the information of product J and product K, where you are provided with the production liter 10,000 and 5,000. You are provided with the sale liter 9,000 and 6,000 unit, and you are provided with the selling price per liter $2 and $1. What was the apportionment of joint cost to product K for the last month? Very simple question, yes. But one particular point which you need to consider, that in order to calculate the apportionment of common cost between the sale value of the unit, you need to consider the number of units produced and multiplied with by the selling price in order to get the sale value. What I am saying that in order to get the sale value of the product J and K, you need to multiply the number of units produced with the selling price per unit. You do not need to multiply the number of units sold with the selling price, because here we are apportioning the common cost. So common cost has been used in the production. So you need to differentiate accordingly. As it is also given in the notes itself that this point, for calculating the total joint product sale value, consider the number of units produced and not the number of units sold. That is, number of unit produced, product sale value is going to be number of unit produced multiplied by the selling price per unit. Got it? Okay. Now we need to do what? We need to calculate the sale value. Okay. So 1 minute. Sale value of J is going to be 10,000 multiplied by $2 is going to be what? $20,000. So we will write $20,000 here. Then $5,000 multiplied by $1 is going to be $5,000. So total is going to be $25,000. Total is going to be $25,000. Now we need to apportionate this common cost between the sale value. Okay? So for K, it is going to be the common cost, that is $60,000 divided by the total sale value of 25,000 multiplied by the sale value of K, that is 20,000, is going to be 60,000 divided by 25,000 multiplied by 20,000 is going to be $48,000 for K, and for J it is going to be 60,000 divided by 25,000 multiplied by 5,000. It is going to be 60,000 divided by 25 multiplied by 5,000 is going to be $12,000. So question is asking us only for the joint cost of the product K. So it is going to be $48,000. Got it? So this is the solution for question number 4. Now comes to question number 5. That is, two joint products J and K are produced in a process. There are two joint products A and B are produced in a process. Data for the process for the last few addresses follows. Data for the process for the last few addresses follows. For product A, it is sales volume of 480, and for product B, it is sale volume of 320. For production of process product A, it is 600, and production of process product B, it is 400. Common production cost in the period was $12,000. So total production cost, that is common cost, is $12,000. There was no opening inventory. Both product had a gross margin profit of 40%. Both the product has a gross percent margin of 40%. Common production costs were apportioned on the physical basis. So common cost is need to be apportioned on the basis of physical basis. So physical basis of what? Unit sold or unit produced? What? On the basis of unit sold or unit produced? Unit produced, because we are apportioning the cost, and cost is incurred on the production and not on the sale. So it need to be apportioned on the basis of number of unit produced. So we need to apportion it on the basis of 600 and on the basis of 400. So the total common cost is $12,000. The total common cost is $12,000. We need to apportion it on the basis of A and B on the basis of number of units produced. So A has been produced at 600 units and B was produced 400 units. So you need to apportion this on the basis of number of units produced. So 12,000 divided by 1,000, that is total number of units produced, multiplied by 600 is going to be $7,200, and 12,000 divided by 1,000 multiplied by 400 is going to be $4,800. That is common cost apportioned to A and B. Now question is saying that the both the product has a gross GP margin of 40%. So question is, what was the gross profit for product A in the period? Question is saying what is the gross profit for the product A in the period. Okay, now the total common cost for product A is 7,200. That is for how many units? That is for 600 units. So cost per unit is going to be 7,200 divided by 600, which is going to be $12. That is cost per unit of product A. Okay, so this is the cost. Now you are provided with the information that gross profit margin is 40%. So as we have understood in the FA exam, that sale is equals to cost plus GP margin percentage. So suppose if sale is 100% and you are not provided with the cost and you are provided with the value of GP percentage. So if sale is 100% and GP margin is 40%, then what is the margin of cost? So cost is going to be 60%. So 60% of cost, 40% of GP margin is equal to 100% of sale value. Got it? Okay. So what I am saying that this cost of $12 is actually 60% of the sale value. Understood? This $12 of the cost is actually 60% of the sale value. So if I distribute $12 divided it by 60% of the percentage of the cost, then I can get the sale value, that is $20. So 12 divided by 60% is going to be $20. So if $20 is the sale value, then what is GP percent? So GP is 40% of the sale value. So $20 multiplied by 40% is going to be 20 multiplied by 40% is going to be $8. So gross profit per unit of product A sold is $8 per unit. Gross profit per unit of the product A sold is $8 per unit. And question is saying what was the gross profit of product A in the period. So what is the number of unit which has been sold for product A? That is 480 units. That is 480 units. So 480 units of the product has been sold and there is a GP of $8 per unit. So the total GP of product A in this period is going to be 480 multiplied by $8. That is $3840. That is $3840. So this is the answer of your question number 5. Got it? So this is how you need to solve. First you need to apportion the common cost on the basis of number of units produced. Then you can get the cost on the basis of GP margin. So if GP margin is 40%, then cost is 60% because sale is always 100%. So if you get the percentage of cost, so if $12 is a cost and if you divide it by 60%, you can get the sale value, that is $20 per unit. And then GP. So $20 per unit of sale multiplied by the GP percentage of 40% is going to be $8 per unit. So GP is $8 per unit. And what is the number of units sold is 480, not 600, because 600 is the number of units produced for product A and 480 is the number of units sold for product A. So if you multiply 480 units with the $8 per unit as a GP margin, that is gross profit is going to be $3,840. Got it? Simple. This is the solution for question number 5. Now comes to question number 6, which is a theoretical concept. A process produces two joint product A and product B. A process produces two joint product A and product B in equal physical quantity. Both the quantities of the product A and B are equal. A and B are sold at a split of point for $5 per kg and $8 per kg. Okay, so this is their selling price at this split of point. There was no further cost after this split of point. There is no further cost after this split of point. Okay, if joint costs are apportioned on the basis of relative sale value, then which of the following statement is true? If they are apportioning the common cost on the basis of sale value, what is the statement is true? If you go on the notes, there are some 2 points given regarding the apportionment on the basis of physical quantity and on the basis of sale value. So on the basis of physical quantity, the point is all the joint product with common cost apportionated by physical measurement will have an equal unit of the cost at the separation point. If they are apportioned on the basis of number of units, then they will have the equal unit cost per unit at the separation point. And for the sale value basis, all the joint product with common cost apportionated by the sale value will have the same gross profit margin at the separation point. So if you are separating the apportionating the common cost at the separator point on the basis of sale value, then all the joint product will have the same GP margin. All the joint product will have the same GP margin. Okay, now this is the same thing which is going to give you the answer. Option A, both product will have the same operating GP margin. This is the correct statement for sale value apportionment, and they are apportioning on the basis of sale value. So this is correct. But also go for option B, C, and D. Just read it. Option B, Product A will have the higher operating gross profit margin. No. Products option C, the cost per kg will be same for both the product. Wrong, because this is on the basis of physical measurement. If it was on the basis of physical measurement, then it is right, but not on the basis of relative sale value. Then option D, the cost per kg of product A will be higher than that cost of the product. No, absolutely no. So this is false. So this is the answer for question number C6. That is, both the product will have the same GP margin if their common cost is apportionate on the basis of sale value. Got it? So this is the solution of question number 6. Now comes question number 7. Which of the following is not acceptable method of accounting for the byproduct? You need to find out which is the wrong statement about the accounting of byproduct. Option A, net realizable value of the byproduct is deducted from the cost of the main product. Is this true or false? This is true. So this is right, but we have to answer the wrong one. That is not a acceptable method. Then option B, pre-separation costs are apportioned to the byproduct to calculate this profit. Are we going to apportion the common cost to the byproduct to calculate the profit? No. So this is false. Okay, this is absolutely false. Then option C, sales value of the byproduct is deducted. Sale value of the byproduct is deducted from the cost of the main product. Yes, this is the exact same thing which is given in the option A. Okay. D, byproduct income less post separation cost is added to the sales of the main product. That is NRV. Byproduct income less post separation cost, that is NRV, is added to the sales of the main product. Yes, or you can reduce it from the common cost. So it is both the same thing. Either you can add on the sale value or you can reduce it from the common cost. So it is true. So A, C and D are acceptable method and B are not the acceptable method, and we have to answer which is not an acceptable method of accounting for the byproduct. So correct answer is option number B. Got it? Okay. So this is the solution for question number 7. Now comes to question number 8. In a period, a process produced 2000 kgs of a main product and 400 kgs of a byproduct. So suppose there was a process, it has produced 2000 kgs of the main product and it has also produced 400 kgs of byproduct. Okay. The cost of the production was $5,000. So the cost of the production, that is common cost, is $5,000. 1800 kgs of the main product was sold at a rate of $10 per kg. So of the main product, 1800 kgs was sold at a rate of $10 per kg. And all of the byproduct was sold at a rate of $1 per kg. So byproduct, that is entirely 400 kgs, and we sold at a rate of $1 per kg. What was there was no opening inventory. So there was no opening inventory. If the sales income of the byproduct is deducted from the cost of the production, if the sale income has been deducted from the cost of the common production, then what is the profit for the period? Okay. So first, what we need to calculate the actual net apportionment cost. So we will calculate net common cost. So which is going to be the total of $5,000 less the sale value of the byproduct, that is 400 kg multiplied by $1, it is $400. So $5,000 less $400 is going to be $4,600. It's going to be $4,600. Now you need to find out what is the profit for the period. So in order to find out the profit for the period, you need to consider the sale value. So 1800 kgs has been sold at a rate of $10. 1800 kgs has been sold at a rate of $10. So you need to multiply sales, that is 1800 kgs multiplied by $10. That comes to the total value of $18,000, the sale value. Now you need to reduce the cost. So cost is $46,000. The cost is $46,000. But this 4600 sorry, the cost is $4,600. The cost is $4,600. but this cost of $4,600 is for 2000 kgs, is for 2000 kgs and not for 1800, because you have produced 2000 kgs and have only sold 1800 kgs. So there is already 200 kgs of the closing inventory which is left with you. So the cost of $4,600 is actually not the cost of 2000 kgs, it is the cost of 1800 kgs. So you need to apportionate the cost also. So $4,600 divided by 2000 kgs multiplied by 1800 kgs is going to be 46 divided by 2000 multiplied by 1800 is going to be $4140. So if you reduce the cost from the sale value, then the answer which you will get is the profit, that is $13,860 is the profit for the period. So this is how you need to calculate the profit. What you need to do, you need to first reduce the sale value of the byproduct with the total common cost, that is 5,000 less $400. Okay, this is 4,000 less $400. So you will get the net common cost which need to be apportioned, that is $4,600. Now only there is one main product, that is main product, and which is produced at the 2000 kgs of unit. Okay, so even if it is produced for 2000 kgs, it has only been sold 1800 kgs. So in order to calculate the profit, you need to get the sale value, that is 1800 kg multiplied by $10 per kg less the cost. So cost of $4,600 is for 2000 kgs, but you have already only sold 1800 kgs. So $4,600 divided by 2000 kgs multiplied by 1800 kgs. So you will get the cost of 1800 unit, that is $4140. So if you reduce $4140 from the total sale value of $18,000, then you will get the profit for the $1800 sold, that is $13,860. Okay, so this is the solution for question number 7. Sorry, question number 8. Now, question number 9. Information related to two process F and G are given as follows. You are provided with the process G, F and G. Normal loss as percentage of input is 8% for F and 5% for G. Input per liter is 65,000 and 37,500 liters, and output is 58,900 and 35,700 liters. For each process, there was abnormal loss or abnormal gain. We need to calculate this. So this is the same question which is copy of question number 2. So again we will solve it. The format is input less normal loss, so you will get expected output, then you need to reduce actual output, so you will get the abnormal loss or abnormal gain. If the answer is negative, then it is gain. Okay, now for F, for G, input is 65,000 and input is 37,500. Normal loss for F is 8%. So 65,000 multiplied by 8% is going to be 5200, is going to be 5200. So if you reduce 5200 from 65,000, you will get the answer of 59,800, that is expected output. For G, the loss percentage is 5%. So 37,500 multiplied by 5% is going to be 1875. So if you reduce 1875 from 37,500, you will get the answer of 35,625 expected output. Now, what less? Now we need to reduce the actual output. So actual output is 58,900 and 35,700. So 59,800 less 58,900, that is $900 of positive answer. That means it is abnormal loss. Now 35,625 less 35,700 is going to be the negative 75. So if you get the answer negative, then it is abnormal gain. So for F it is abnormal loss and for G it is abnormal gain. So answer is again option number A, that is for F it is abnormal loss, for G it is abnormal gain. Got it? Simple. So this is the solution of question number 9. Now the last question for this chapter, that is question number 10. Two product G, P and Q. Two product P and Q are created from a joint process. Both product can be sold immediately after the spirit of there was no opening inventory and no work in progress. The following data are available for the period. Total joint production cost is 77,800. That is, it is your common cost. Now you are provided with information of product P and Q. Number of unit produced for product P is 12,000 and Q is 10,000. Sale unit are 10,000 and 8,000. Selling price is $12,000, $10 and $12. Using the sale value method or apportionate the joint production cost. We are using the method which is the sale value method to apportion the common cost on the joint product. What was the value of the closing inventory of product Q for the last period? Again, my one of the favorite question from this chapter. Market 3-star. Okay, so you need to find out the value of the closing inventory of product Q. So first you need to apportion the common cost. The common cost is 77,800 and you need to apportion it between P and Q and in the basis of sale value. So what is the sale value of product P and Q? That is 12,000 multiplied by $10 and 10,000 multiplied by $12. Do not consider the sale value. Do not consider the sale value because sale unit, because the common cost need to be apportioned on the basis of production, not on the basis of sale unit. Okay? So the sale value of P is $12,000 unit multiplied by $10 per unit is going to be 1,20,000 and Q is going to be 10,000 multiplied by 12 is again going to be 1,20,000. Okay, so the total sale value is $2,40,000. Now you need to apportion this on the basis of sale value. So sale value is $1,20,000, $1,20,000, and you need to apportion it 77,800. So you need to divide 77,800 common cost with the total of the sale value, that is 2,40,000 multiplied by 1,20,000 is going to be the 38,900, and this is again going to be $38,900. That is common cost is equal. Now using the sale value of the method of apportionate joint production cost, what was the value of the closing inventory of the product Q? So if 38,900,000 is the common cost for joint product Q, that is for 10,000 unit produced, for 10,000 unit produced. So what is the value of the cost of the closing inventory? So if you have produced 10,000 and you have ended up selling 8,000, then what is the amount of closing inventory you have? So the closing inventory is 10,000 unit less 8,000 unit, that is 2,000 unit. So answer is 38,900 divided by 10,000 unit multiplied by 2,000 unit is going to be 38,900 divided by 10,000 multiplied by 2,000 is going to be $7,780. The answer is going to be $7,780. So this is how you get the solution for question number 10. And with this we have solved all the question of our chapter 7, that is process costing, joint product and further processing. Okay, so this is the solution for all the question as per your ACCA study hub question bank. So this is all for this class. We will see you in the next class with the new chapter. Okay, and if you are watching this lecture on the YouTube, if you want notes, question bank and board notes, then you can click on the description, so it will link you with the Telegram group where all nothings are available for you free. Okay, so bye bye, see you in the next class.